So, you want to make a big profit in the crypto market? Of course you do. Who doesn't, right? But you need to be ready for insane, stomach churning volatility. But don't be afraid because it's actually a feature of the crypto market, not a bug. A feature, okay? But where do you start? Do you turn to Bitcoin? You certainly could if you're playing with a big enough stack to start with. But for a lot of people, it's logical to move out along the altcoin risk curve, where returns can be higher and profits can then be plowed back into BTC for long-term wealth storage. As a strategy, it makes sense. Sounds easy, right? But you have to be willing to stomach the risks and the sometimes intense ups and intense downs. Oh, everybody loves volatility when it's upside volatility, not so much when it's downside, because altcoin trading is pretty damn nuts. And if you're doing the altcoin jungle game, then it's a good idea to understand exactly why altcoins are so damn volatile in the first place. Because if you know why your bags are doing what they're doing, it actually becomes a little bit easier to stay calm when things get a bit crazy in the market and to buy and sell at the right times, or just hold through the turbulence if that's your plan too. But before we go through why altcoins are volatile, let's just recap a little bit why we should learn to love volatility. Volatility is your friend, whether you want to believe it or not. It's true. In fact, you should actively seek it out. Volatility is great. Just imagine a completely stable market where there's no stress. Everyone knows exactly how much everything is worth, and we all buy and sell at the exact, precise, correct value all the time. Sounds nice. Sounds relaxing. And it's the worst possible place to book profits. Now, if you've already hit your lifetime wealth targets, congratulations, of course, and your goal is just now wealth preservation, a super stable environment might actually work out just fine for you. But if your goal is to grow your wealth, as I assume the goal is for the majority of you watching this video, then volatility is your friend and you should seek it out. You want to buy as low as possible and sell as high as possible, and volatility helps that happen. And for the widest possible range, you need big movements in the market, aka lots of volatility. Now, after that, absolutely, you probably want to park those profits somewhere more conservative, high risk altcoin money into low risk stuff to conserve your wealth. But you need to make the gains first, man. And on that note, we should really be glad to be trading when crypto is an option, because there is currently no other market quite like it in the world. No market that's quite so insane, where the barriers to entry are so low, where the barriers to deploying new tokens are so low, where the volatility is so high, meaning 10x or even 100x or higher returns frequently occur to people like you, and where there is a constant conveyor belt of just new tokens coming by, protocols vying for your attention. So while there are very, very big risks and you can lose all your money like that, never forget that, okay? But that volatility is important. And yeah, it goes both ways. It goes up, it goes down. But that volatility is the reason that we're here. It's what provides the big gains in the market. And let me just remind you that if you want to keep on top of everything happening in the crypto space to find those volatile opportunities, my team and I publish the best weekly newsletter in the business. It's called Wealth Mastery, and it is packed with all of the latest on altcoins, meme coins, Bitcoin, DeFi, NFT, charts, and much more. We are working hard to help you stay ahead of the curve of the market. Our readers love it. I know you will too. You can join 125,000 plus weekly readers for free using the link in the description or the pinned comment over on X. Now back to altcoin volatility conversation. The first key factor making altcoins so volatile, let's discuss altcoin novelty. You see, if you're immersed in crypto land, as I am, and I suspect many of you will be, then, you know, Bitcoin's the granddaddy, the boomer coin. Such a new technology, feels funny to say it, but it's true for crypto. The place where all roads lead is back to Bitcoin eventually. BTC to you is definitely not novel or in any way crazy, but remember that it's only really this cycle with firms like BlackRock launching Bitcoin ETFs that a majority of normie investors, especially institutional ones, are really starting finally to view BTC as a legitimate asset. So from that traditional perspective, if BTC still seems kind of novel to the normie investor, then altcoins are truly exotic, crazy shit, okay? A whole heap of unknowns are attached. Questionable reputations are attached. Uncertainty around what they actually do, How does this make money? What is the token model? Look, Bitcoin's just easy, man. Just it's digital gold. There you go. You understood it. All investors immediately have a starting point to assess it from because it's an easy concept to get. But how many altcoins come with a 2-word, easily digestible summary like that? None. Maybe dog coins. Dog coin. Done. Anyway, the more novel a token is, the more difficult it might be to package it up and to assess it. And there's some really crazy exotic stuff out there. And that puts alts at the extreme end of risk on assets, the kind that can move up sharply in a bull market and dump instantaneously, dramatically, viciously, savagely when sentiment swings. You'll see your altcoins go down by 99%. Low market caps, low liquidity, all that kind of stuff. Other key issues, really important to keep in mind. For example, Bitcoin has a market cap of around $1.4 trillion at the time of recording. Well, by comparison, Chainlink has a market cap of around $10.5 billion. Very important technology. Love my Chainlink bags. By the way, if you want to see full portfolio disclosures, link in the description, pin, comment, and X. Farther down the rankings, though, and that Chainlink's a big coin in the market. It's a top 20 coin. Further down, we have stuff like leading AI coin BitTensor, which is still in the top 50. It has a market cap around $2.8 billion. It's a baby. Okay? Remember, all crypto combined is worth less than NVIDIA stocks. Anyway, that means for BitTensor, for example, it would take a lot less money coming in to move the BitTensor price. And as we move even further along the altcoin curve, the market cap gets smaller and smaller and smaller. And at the really low end, we have nano cap meme coins and other tokens with market caps in single digit millions and even less than a million sometimes. And you can imagine that in these cases, even just one big buyer or a small group of buyers jumping in at the same time can easily shift the price by multiple X's. You'll see tokens go hundreds or thousands of percent almost overnight sometimes. This is where you get those crazy moves. 10,000X happens. It's crazy, but it's true. A great example, of course, right now, Solana meme coin, seeing crazy things. We had like the book of meme ran up earlier this year from literally nothing to a market cap of $1 billion in like 3 days. That's insanity. Now, Book of Meme could do that because, of course, it was launched by a niche but well-respected NFT artist who also had a trusting community on his side. So all that obviously worked in his favor, and it still has a market cap of just under $1 billion. So it actually kind of maintained its success, which is pretty impressive for any meme coin where there's thousands of meme coins launching a day. But it's at this end of the market that you also get pump and dumps, rug pulls, major price manipulation, every kind of finance and gambling related degeneracy that you can possibly imagine. It gets real dark real fast. Also, at these kinds of market caps, if a whale offloads a large bag after the price rockets up, guess what? They're going to nuke the chart. They need liquidity, and that's you. Watch out. Because at these levels, the liquidity to sell, it just simply doesn't exist. It's not there. That all said, though, there are absolutely solid projects emerging all the time from nano caps and low caps, things with $1, $5, $10, $20 million market caps, including memes, of course, that go on to stick around and make a big impact. Dog with hat. Great example. They put the dog on the hat, man. Bleeding edge technology. It had a sub $100 million market cap at the start of the year. Now it's worth $3.5 billion. That's a great example of something that goes on to make it. But needle and haystack kind of stuff, okay? New AI coins like Palm and Spectre also look like they may have more to come this cycle. Not financial advice, just sharing some examples, okay? But something you'll notice is that coins that do well rely on a word we hear all the time in crypto: narrative. So stick around. Let's figure out exactly how narrative affects volatility. Look, crypto narratives, they are the stories that are being told to make people want to actually throw their hard-earned money into these, shall we call them assets? Assets, yeah. This applies even to Bitcoin at the top of the chain, which has the best narrative, digital gold. The narrative might be ETF approval, might be ETF institutions buying those ETFs, people, millionaires, billionaires storing their wealth, inflation hedge, all that kind of stuff. It's all narratives around Bitcoin. Sometimes these narratives are for real. The ETFs did really get approved. Institutions are actually buying Bitcoin. Sometimes, especially when it comes to altcoins, though, the stories become less solid and more prone to evaporate, aka a lot more bullshit. But people can buy that bullshit narrative for the short term. And all, of course, that means volatility. When a narrative is hot, the market believes in it, even if it doesn't make sense. Like Metaverse in 2021. Metaverse is going to take years and years to build. Market priced it in as if it was coming tomorrow. When everyone believes in it, or collectively pretends to believe in it, prices can soar very fast and these assets just go crazy. But just as quickly, there might then be the realization that actual development is a long way off or a long shot to actually work. Great idea, probably not going to work. Or, hey, great idea, but it's going to take 5 or 10 years. Or attention simply dissipates naturally because lots of stuff happening in the market every day. Focus moves elsewhere. New narrative emerges. New meme coins come out, whatever it might be. In the last cycle, of course, we had strong narratives around Ethereum killers. For example, all those alternative layer ones that would supposedly go on to outperform Ethereum, take away all its market share. Ethereum's the old dog. New dogs are going to come in and kill it, et cetera, et cetera, et cetera. Again, we had the metaverse narrative, which was really, really bolstered. Like Facebook and stuff like that became a much more macro narrative for the stock market and stuff as well. Zuckerberg even changed his company's name to Meta. It was that serious, right? Metaverse, still very exciting, still going to be cool, but it's going to take a while. In this cycle, of course, we have narratives around artificial intelligence, real world assets, decentralized physical infrastructure networks, the meme coin super cycle. Meme coins are the big narrative of this cycle. By the way, it's not exactly clear what a meme coin super cycle actually is. It probably isn't a real thing at all. It's just some bullshit phrase that people make up to get you excited about buying meme coins. But the phrase itself feeds into the idea that meme coins are going up. This is the time, and people love meme coins right now. Now, just to reemphasize, though, narratives can be based in reality or they can be made up of absolute bullshit. But either way, altcoins are especially affected by those narratives and the availability of people to convey those narratives and believe those narratives. The bigger the volatility in response to a matching narrative, the bigger the price moves. And from there, let's look at a similarity between the stock market and the crypto markets. So let's talk about beta to BTC. So that's borrowing some terminology from the stock market here. So we can make the general observation that altcoins basically have a high beta value in relation to Bitcoin as the benchmark. So in traditional finance, a high beta stock, like a tech stock, for example, of course, they're very much correlated to the broader market moves, moving up and down, risk on, risk off attitudes, all that kind of stuff, but they move more violently. So the S&P 500 might be the benchmark, and those beta plays, the tech stocks in this example, they move much faster up and much faster down. They're high beta. Low beta stocks are things like utilities, boring stocks, and they're correlated but less volatile than the benchmark, the S&P 500, for example. Now in crypto, it's Bitcoin. That's the benchmark. Altcoins that have high beta, you will really see this play out because they feed on rather than generate bullish sentiment. That's really important to understand. They feed on rather than generate. Bitcoin can set the market off with wild bullishness. That's where the liquidity inflows start. That said, though, this isn't a nailed on relationship all the time, especially when there are more new tokens being created than ever before. Meme coins, for example, have their own sort of trends. But essentially, you need to be more picky now than ever before, trying to find the good quality altcoins that react most strongly to bullishness. And a great example of this cycle, of course, would be Solana. But that brings us to another point, which is that not all altcoins are the same. So how can you differentiate? How can you find the good ones? Let's talk about categories of altcoin. The word altcoin is pretty damn broad. So it basically makes sense to split up into subcategories. And to start, how about ETH? Is that even an altcoin anymore? Well, Bitcoin maximalists will say, of course it's an altcoin. It's the ultimate shitcoin. A lot of other people will say, no, it's too big to be classed as an altcoin. It's its own asset class now. There are even spot Ethereum ETFs coming. So of course it's its own asset class. It's not an altcoin anymore. So let's just say that if it's an altcoin, then it's in its own category. At least it isn't especially volatile. Let's say that. Anyway, after ETH, we have the major alternative layer ones, which make up a lot of the top 20. Things like Solana playing a huge role this cycle. Coins like Avalanche, Cardano, all that kind of stuff, usually in or around the top 10, top 15. We've got newcomers like Chain absolutely surging, and there are many, many others, dozens, hundreds probably. Among these are the kinds of coins that are very, very volatile, but on extended cycle long time scales. Similarly positioned, there's also the ETH layer 2 scene that's going on with networks like Arbitrum and Base, but we also now have, exhaustingly to say, layer 3s built on top of layer 2s. Orbit chains and Arbitrum, a chain called Degen on top of Base. I mean, It's also tiresome, isn't it? Then you've got utility projects. So there's things like oracles, AI coins, real world asset coins, decentralized exchange tokens, gaming tokens, which can vary a lot in market cap and a lot in utility. And many of them have extreme swings on short time scales. And after that, at the very most volatile and the most risk-laden end of the scale, of course, we have a tsunami of untold proportions of new meme coins being launched all the time. Although don't forget that a few memes can potentially go on to establish themselves as really long-term assets. Dogecoin, for example, first meme coin, the OG meme coin, launched way back in 2013. It is now a definitive piece of furniture in crypto land. It's part of the landscape. It's not going anywhere. It is the OG meme coin that made it. Finally, though, what about Bitcoin? By which I mean, what makes Bitcoin different and what can it teach us about altcoin volatility? Well, what it comes down to is a list of characteristics. Bitcoin was the first. That makes a difference. Same reason that Ethereum is important as the first major smart contract platform. Bitcoin's been working perfectly as designed for a decade and a half. It wasn't pre-mined. It has two possible utilities: store value, medium of exchange. Both very simple, both easy to understand. Its market cap has grown into the trillions, and it's going to go on to add many, many more trillions to it. It's listed on every major centralized crypto exchange where there's plenty of liquidity for it. And what's more, of course, is now being accepted as a major traditional finance asset, with ETF listings proliferating around the world. So it can be accessed as part of a regular stock portfolio now through these spot ETF products. And so actually, that list of what makes Bitcoin different also gives you a pretty clear idea of how much of a roller coaster any given altcoin might actually be. Low liquidity, not listed on many exchanges, all kinds of crap like that, massive insiders. Bitcoin checks all of the good boxes. So the further from those same boxes a new coin is, the more volatility you can probably expect. I hope that helps explain why altcoins are so volatile, and also why that volatility is actually a big positive for you if you can play it right. Thanks for watching.